Right, so hello everyone and welcome to part 2 of this video on the top metaverse stocks that you can profit from by investing and trading in these stocks. So in part 1, I talked about what are the stocks that I think are essential in creating and maintaining the metaverse. So these are the stocks of companies that obviously profit from the rise of the metaverse. So you've got stocks that are involved in the hardware, the operating system, and the cloud infrastructure. You've got Meta, the artist formerly known as Facebook, you've got Microsoft, you've got Amazon, and then you've got the content creation tool providers like Autodesk, like Roblox and Unity, to name a few. And then you've got all these semiconductor companies like Nvidia, TMC, and of course you've got others like ASML and Lam Research and so on and so forth. So in part 1, we focused on what to buy. In part 2, I'll focus on when to buy. Because one of the mistakes a lot of newbies make is that they watch these videos or they read articles and they say, hey, this stock is a great stock because it's in the right industry, and they get excited, they jump in, but they jump in too high when it's overpriced, when it's overextended. The moment they jump in, what happens? It collapses, they lose a lot of money. So remember, no matter how good a stock is, it's all about timing. It's all about knowing when to buy. Remember, there are 4 keys to investing or to trading. The first key is knowing what to buy. So in part 1, we talked about what to buy. But the second key is even more important, which is when to buy. Because a great stock can be a bad trade or bad investment if you buy at the wrong time, if you buy too high, too overpriced. So number 2 is knowing when to buy. I'll talk about this in this video. Number 3 is how to size your position. In other words, how many shares do you buy? How do you allocate your portfolio? That's important as well, because you don't put all your eggs in one basket. You have to diversify, right? And of course, the 4th key is knowing when to sell. Okay, so say it with me again. What are the 4 keys? What to buy, when to buy, how many shares to buy, and when to sell. And again, the problem with most newbies is that they only focus on the first one and they don't know the other 3, and that's why they always end up losing money. So again, in this video, I'm going to talk about when to buy. Now, how do I decide when to buy a stock? I look at 2 things. I look at fundamental analysis and I look at technical analysis. So for me to determine the entry point, I want to look at what's the intrinsic value of the stock. Now, for an investment, I only want to buy when the price of the stock is selling below its intrinsic value. It must be undervalued to buy for an investment. However, sometimes if the price is overvalued, I may buy as well, but not for an investment, for a short-term trade. So there's a big difference, right? Investing means there's no stop loss. You just buy, you hold for the long run through the ups and downs. You hodl all the way, okay? That's for investments like marriage. But for trading, it's like a swing trade. It's like a one-night stand. For trading, you can buy when it's overpriced, but you have to also enter based on the chart patterns to enter at the optimal point of the chart patterns. And for trading, you got to have a cut loss point, a stop loss, and a defined profit target. So as I run through these stocks, I'll tell you that, hey, for some of these stocks, I will invest in them. But for some of these stocks, I won't invest in them because they are too overpriced, but at the right price, I may enter for a swing trade. So I'll talk about the difference. Now again, for investing, I just buy the shares. I hold it, right? But for trading, yeah, you can trade the stock directly, but usually for swing trading, I prefer to use options to trade it. And I don't just buy call options, because call options are like a lottery ticket, right? It loses value every day, and if you're not right by a certain time, your options lose all its value. So for options, I like to use like bull call spreads and bull put spreads, which are credit spreads, because by using these option strategies, time doesn't work against me. In fact, time works in my favor. So those are more advanced option strategies I use to swing trade. So with that, let's run through these stocks. Let's identify potential buy points. So let's go in alphabetical order, and I'm beginning with Autodesk, ticker symbol ADSK. So first question, is this a stock I want to invest in or I want to trade? Well, the answer is it's a stock that I won't invest in at this point. I would do a swing trade. Why? Because number one, it's way overvalued. So when it's way overvalued, I won't buy for an investment, but for a one-night stand. In fact, if you take a look, the intrinsic value of this stock is only $248. So at the current price of 333, it is way overpriced. Now, if you're wondering how I calculate the intrinsic value, it is based on a discounted cash flow or discounted net income method, which means I project the net income of the company for the next 20 years or the free cash flow of the company for the next 20 years, and I discount it to the present value. So just to show you, I use an intrinsic value calculator that my students use in the Piranha Profits course. All this is taught in the course, of course, our value momentum investing course. And you can see right here, based on Autodesk current profits of 900 million, if you project the profits at a 31% growth rate, which is pretty optimistic for the first 5 years, and then we reduce the growth rate. So based on these numbers, the intrinsic value is 248. So at the current price of 333, it is 34% overvalued. Now, some people have told me, Adam, is there something wrong with your calculation? Because I did an intrinsic value on Autodesk and I got like $300 or $400. So why is yours so low? Let me tell you the mistake that many people are making when they value Autodesk. And let me show it to you. Now, I'm going to show you the income statement of Autodesk, okay? Now, take a look at, now this is the last 12 months, 2021. This was, 2020 and 2019. So this is going back in the last few years. Now, if you take a look at their net income, their net profit, you can see that in the last 12 months and the last financial year, it looks very nice, right? It looks like, $1.3 billion, 1,300 million, 1.3 billion, 1.2 billion, okay? But the curious thing is, if you go back, you notice that their profit was a lot lower. Their profit was like 214 million. And in fact, they were losing money before that. So why the sudden jump in the profits? Where did the profits come from? Correct? And a lot of people, what they do is they take the recent profits of 1.3 billion and they project it into the future. And they get a very good high intrinsic value. And that's a big error. Now, take a close look at this. If you look at this, earnings before taxes, EBT, all right, earnings before taxes, even if you include the unusual items or you exclude, it doesn't matter, all right? Notice that their actual profits are actually 294 million, 546 million, and 597 million, okay? So how did 546 become 1.2 billion? How did 597 become 1.3 billion? Where did this extra money come from? And the answer is here. You can see that the increase of 700 million and 600 million was because of a special income tax credit. So because the company had a big income tax credit coming in, it magnified and distorted the profits to look bigger than it usually is. So you have to discount that, you have to take that away. So what I did instead was I took an average of the last few years instead of taking the latest year, which is distorted by the taxation. So by doing that, I put in a more reasonable figure of 900 million, which I think is already very optimistic, right? And not 1.3 billion, right? So based on this, you can see that the actual intrinsic value already optimistically is 248, which means that this is what the stock is worth and the stock is selling over there. It is way overpriced. So this is something that you can't invest in unless it goes below that level. But it's something we could do a swing trade on. All right. So if I want to swing trade this sucker, where would I enter this stock? Now remember, in trading, you always want to enter ideally during a retracement. Yeah, there are people who are breakout traders. They look at a consolidation. When it breaks out, they enter on the breakout. You can do that, right? But I prefer to enter during a retracement. Remember that prices don't go up in a straight line. They move in wave patterns, right? Wave up, wave down, wave up, wave down, wave up, wave down. And the safest time to enter a trade is during a wave down, when it waves down to a level of support, right? So you always want to enter at a wave down, get in before the next wave up. And don't jump in after the wave up, because then you're buying at the high. You always want to buy at the recent lows. So if you take a look at Autodesk, you can see, now these are the daily candles, okay? And you can see over here, there used to be a strong support at the 200 moving average. Can you see a very strong support over there? Now it broke the support, but it came back up again. So again, you can take a look at the waves, right? It's a wave up, wave down, wave up, wave down, wave up, wave down, all right? And now it's waving up. So again, when it's waving up, you don't want to jump in because it could go up a little bit more, but pretty soon it's going to wave down again. So always wait for a wave down to a support level. Now the question is, what support do we use? Okay. Now, normally on the daily candles for trading, I want it to retrace to at least the 50 moving average, at least, or lower. Okay. And the 50 moving average is this blue line that you see here. So either retrace to the 50 moving average or to a strong level of support, whichever comes first. All right. And you can see from the charts, there is a pretty strong support level at 301. Why? See previous resistance, previous resistance, previous resistance, right? And yeah, it broke that resistance, came back down again, but this line still has some kind of significance, right? And the 50 moving average, the blue line is somewhere around there, about 300. So I would say this would be an area to take a trade in. So again, in trading, you got to be patient. You got to wait. Don't just jump in, you know, aggressively, you know. So I would say wait for a pullback to about 300 to take that trade. And again, for trading, you got to have a proper stop loss, a proper profit target, right? But I tend to like to use options to trade these suckers. And I'll show you later on examples of certain option strategies that I will use later. But let me cover all the stocks first, right? Now, sometimes on the daily candles, if the price action seems a bit choppy, like for ADSK, you can zoom out more to the weekly candles to get a clearer view. So if I go to the weekly candles, let me go to the weekly candles. There. So you can see a clearer view of the price action, right? You can see that wave up, wave down, wave up, wave down, right? Wave up, wave down, wave up, wave down, right? And now it's again waving up, right? So it's halfway through the wave. You're going to wait for it to wave up, wait for the next wave down, catch it here before it goes up again. Okay, so that's ADSK. Not ripe yet for picking, but something to watch. Next, let's look at Amazon, ticker symbol AMZN. Now, Amazon, is it something I would trade or invest? The answer is both. In fact, Amazon is something you can invest in. Why? Because it is undervalued. That's right. So if you do an intrinsic value calculation on Amazon, this was my latest one over here, you can see that based on the free cash flow, blah, 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 the intrinsic value is about 3,686. And I must say that this is a pretty conservative valuation. If you look at certain websites like Morningstar, they value Amazon at about 4,000 plus, right? So I think that mine, 3,006, is pretty conservative, right? And the current share price is 3,540. I'll put that in, 3,540. Boom. So currently Amazon is about 4% undervalued. So yeah, you could invest in it because it is slightly undervalued, although you want a bigger discount, right? Or you could trade it as well, all right? So generally, I like to invest in stocks that are number one, undervalued. Number two, they have got very consistent income and cash flow, which Amazon has and ADSK doesn't have. Because see, at ADSK, their profits and cash flow were quite choppy, right? So it's something that I rather trade because it's not as predictable as Amazon. So for Amazon, where would I enter? All right. Now, again, if you look at Amazon on the daily candles, let's go back to the daily candles, you can see it's very choppy. The price action is very choppy. right? It's like very choppy. It's very choppy. So sometimes when it's very choppy on a daily candles, you can't see a clear pattern. Go to the weekly candles, you get a clearer perspective, right? So I'm going to go to the weekly candles. There we go. And you can see on the weekly candles, isn't it clearer? It's a lot clearer, right? And in fact, you can see a strong support on the 50 moving average on the weekly candles, right? You can see it went down, boom, bounced off, bounced off, bounced off, bounced off. There we are, right? Very nice pattern. So you want to see a very nice pattern that you know that, okay, this 50 moving average is a really strong level, okay? Now, does it mean that you have to wait for it to go back to the 50 to buy? Well, you could, all right? But see, for investing, you don't have to buy all at one time. Now, trading is one shot, one kill. You just get in, get out, right? Stop loss, profit target, get out, right? But for investing, I like to enter in stages. So for example, if I want to buy, say, 100 shares, I don't buy 100 at one go. I may buy 20 shares first or 25 shares first, and then another 25. So I enter in tranches of about a quarter position each at different support levels, all right? So the deeper it retraces, the more I add to these stocks, because these are good stocks. They will bounce back eventually, right? They are not falling knives, they are bouncing balls, okay? So for Amazon, you can see on the weekly candles, there's a very strong support at the 50 moving average, which I mentioned, the blue line. So definitely at the 50 moving average at 3297, this 3297 would be a buy level, okay? But again, if you want to take a first bite at Apple, at Amazon, you could enter a bit earlier. Why? Because if you look at the daily candles, let's go back to the daily candles over here. All right. What did I mention about the daily candles? I mentioned that on daily candles, you could enter at the 50 moving average or a strong support. Okay, so if you look at the daily candles, is there a support level? Well, you can see that there is a bit of a support here. Well, there's a resistance. Okay, resistance, right? A previous support. So this level here could act as a support. And it also coincides with the 100 moving average, which is this orange line, right? Hence, 3425 could be an initial entry to Amazon, right? So in other words, you can see the waves, right? Wave up, wave down, wave up, wave down, enter, write it up, right? And it is undervalued, okay? So for investing, you could buy one tranche over here. And if you get a lower, you got a deeper correction, for example, you could take, another level over there, which is another strong level of support. Another strong support here at 3176. All right, so these are support levels where I would add shares for an investment in Amazon. Again, Amazon, something I would hold for many, many years because it is undervalued and very predictable cash flows. Okay, so that's Amazon for you. Next, let's go to Facebook, now known as Meta platforms. And Facebook, you'd be surprised. It is actually damn cheap because of the recent bad news, okay? In fact, the intrinsic value, guess. You won't guess. Yeah, the intrinsic value is 432. I kid you not. My intrinsic value is 432. So at 342, it is really damn cheap. But even though it's cheap right now, doesn't mean you just jump in. You have to look at the charts. You want to enter at a support level, okay? Now, if you look at the daily candles again, so again, for Facebook, because it's undervalued, and again, Facebook has very predictable cash flows. Let me just show you. There we go, right? So if you look at Facebook, you can see the sales. Sorry, yeah, these are the sales. This is sales revenue, right? Operating cash flow, free cash flow going up consistently. These are companies you invest in. But for Autodesk, which is the one that I said is a bit, not that predictable, different, right? Look at Autodesk. You can see it's very choppy, right? It's like, it's very choppy. It's not a clear, consistent cash flow generator. Hence, I'm just trading that one. And again, if you look at Amazon, Amazon is also this Amazon. Amazon is a very, very predictable cash flow generator, operating cash flow, free cash flow, very, very nice, right? So you got to look at the fundamentals, very important, because remember this, when a company has good fundamentals, it's like a rubber ball. Even if it drops temporarily because of a market panic, don't worry, it will bounce even higher. It's a bouncing ball, okay? But if it's got poor fundamentals, it's losing money, it's not consistent cash flow, it drops, it's a falling knife, all right? So that's why you got to cut loss, get out if you're trading. So there's a big difference. You got to understand that. And of course, we cover this a lot more in our Piranha Profits, investing courses, trading courses, and do attend Black Market, which is starting this weekend, where we'll reveal even more powerful strategies for you guys. All right. Okay, so let's go back to Facebook or Meta. I can't get used to calling it Meta. Sounds so strange. Okay. So on the daily candles, let's see. Well, let's go to the never mind. We're at daily candles. Let's stick to daily candles first, right? Now you can see there has been a strong support at the 200 moving average. Can you see that? Hit the 200, bounce, 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 right? At the same time, there is a strong horizontal support at 325. So it recently bounced up here, right? So I added more shares at this level. So did my students, because of this bounce of the support. Now, right now, I would say that could you still get in over here? Yep, nothing wrong, right? Because again, it's now waving up, but it's not run away too far, right? So it's still within that range. It's still something that you could add as an investment, right? Sure, you could trade it as well, okay? And if you look at the longer term weekly candles, let me go to weekly candles. Because on the weekly candles, you can see longer term levels of support, okay? And there we are, okay? You can see on the weekly candles, previous resistance, right? Previous resistance here becomes support, right? Strong support, support over here. Another strong support level at the 200 moving average. So you can see that I mark out all these support levels. Why? Because during a correction, during a market drop, whatever reason, it could drop to these levels. And that's why for an investment, if I wanted to again buy 100 shares of Facebook, I won't buy 100 shares all in here, because you never know, in a bigger correction, it could drop to these levels. I want to average in my position. I like to buy more and more and more and more, right? So I got a good position. When it goes up, hallelujah, I make a lot of money, right? But again, for trading, if it's just a short-term trade, you could just get in here and write it up, placing a stop loss below the recent swing low, or using options to limit your risk, okay? Now, the next one we're looking at is Meta. Now, what is Meta? Isn't that Facebook? I'm confused. No. Now, Facebook, which is now known as Meta, is still using the ticker symbol FB. But on the 1st of December, it'll be called MVRS. That'll be the new ticker symbol. So no more FB in the future, right? Now, what is this META? This META is actually an ETF. So it's the Metaverse ETF that consists of many companies that will profit from the metaverse. So if you don't want to buy these individual companies, you could buy this ETF known as Meta. And again, just because it looks sexy, looks hot, yes, metaverse, don't jump in right now. You got to wait for the right time. So if you look at this ETF right here, let's look at the price action here. Would you want to jump in right here? Would you want to buy right here? Yes or no? Please say no. No! Why? Again, don't chase the girl. Or the girl may turn around and give you a tight slap, right? Never chase the girl. Wait for the girl to come to you. Never have FOMO. Wait for the stock to come to you. If it doesn't come to you, just wait, okay? So you can see that, right? So it's like, you know, wave up, wave down, wave up, wave down, wave up, wave up. Okay, so again, it's like breathing pattern, right? Breathe out, breathe in, breathe out, breathe in, breathe out. Eventually, it will breathe in. wait for it to breathe in and take your entry there before the breathing out. So don't chase this guy. Let this guy come back to you. Now, question is, come back where? Now, again, on the daily candles, personally, I'll only answer if it comes near the 50 moving average or a strong support, which is here. This was the previous resistance, broke out, and it will become support during a retracement. All right, so wait for a retracement down, somewhere around this area, about like 1530, 1540, and then take the entry out. And again, if it doesn't come down, so be it. Look for something else, okay? Never have that FOMO, because there are many fish in the sea. You know, you take that fish that comes to you, all right? It doesn't come to you, just let it go, and you don't have to be hung up on one stock or ETF, okay? All right, quickly, next one, Microsoft, really quickly, okay? Microsoft, is it something we can trade or invest in? The answer is both, right? You could invest, you could trade, and you could invest. Why? Because Microsoft, again, consistent profits, cash flow, bouncing ball, and undervalued. What's the intrinsic value? My last calculation is about $340, right? $340. So currently at $339, it is just at the fair value. So I wouldn't invest at this point because it's not cheap enough. Usually you want to get in when you get like a 15% or more discount to the intrinsic value. Okay, so yeah, not cheap, but not expensive, right at fair value right now. Now, where would I enter? Now, if you take a look at the weekly candles, right? Again, look at weekly candles. And when you invest or trade in a stock, you always want to look for historical patterns of support. So historically, whenever the stock had a wave down, where did it find support? And you can see it's pretty obvious with Microsoft. Can you see that this 20 EMA, the red dotted line, is a very strong support? Can you see that? So wave up, wave down, toing, wave up, wave down, wave up, wave down, wave up, wave down, wave. Every time it waves down, it finds support at the red line. Very clear. Wave up, wave down, toing. There we go. And now it's waving up. So do you want to buy on a wave up? Yes, yes, yes. No, never chase the girl, right? Wait for the girl to run and run out of energy and then retrace back to the red line, and boom, we get in right there. Roughly about 302 before the next wave up. And at 302, you'll be nicely undervalued and nicely at the support level. So that's Microsoft. Okay, next one. How about Nvidia? Can we trade or invest in Nvidia? Now, Nvidia, if you take a look at the company, it's a wonderful company. It's a great company, right? Consistent cash flow and profits. Beautiful. The problem is, it's bloody expensive. It's in a bubble. So as much as I love the company, but I can't buy it as an investment, but I can trade it using options. Because again, one night stand, define risk, get in, get out fast, but don't hang around too long. Okay, because it's going to break your heart when it's in a bubble, right? And again, if you look at my valuation for Nvidia, I'm being very, very generous. I'm assuming a 32% growth rate for the next 5 years. Okay, and you know, that's really being very generous, right? And based on the current cash flow, that gives me an intrinsic value of 195. And at the current share price of 302, it's 54% overpriced. All right, so it's, you know, it's like, you know, you want to date this wonderful girl or wonderful guy, but they only want to eat in the fanciest restaurants. You just can't afford them, right? Maybe for one night, but you can't marry them. They'll clean you out. Okay, so Nvidia for now, trade it. All right, until it gets cheap, then we invest in it. Okay, so again, if you look at the price action, right, there we go. Okay, see, wave up, wave down, wave up, wave down, wave up, wave down, wave up, wave down, wave up. Now it's waving up. Don't chase the girl. Don't chase the girl. Wait for the girl to come down. Wave down. Boom. So wait for it to come down to roughly 236. That would be an entry to catch it on the next wave up. Why? Because that acted as a pretty strong support previously. That's Nvidia. Okay, 2 more to go. Next is Roblox. Now, Roblox, invest or trade? The answer is you got to trade this. Can't really invest in it. Why? Because this sucker's not making money yet. It's still very speculative, okay? If you take a look at the, let's see. Yeah, Roblox over here. So if you take a look at this, yep, you can see that it's one of those speculative growth companies. Revenue is rising, but their profits are still negative. In fact, they're still losing a lot of money, right? So something that you want to trade, not invest in, because it's not consistently profitable yet. And if you look at the price action, because of the recent news of the metaverse, you have what we call a parabolic move up. All right, so never jump in when you see a 90-degree move, because usually after a 90-degree move, what happens? It'll crash down. Okay, maybe not all the way down here, but it will pull back. It's like when you get too high on drugs, okay, or alcohol, it's like, whoa, I'm high. What happens the next day? Hangover, right? So wait for the hangover to get in, okay? So again, strong resistance, strong resistance. I want to wait for it to pull back to this 90 zone, okay, before taking an entry. Again, it may or may not pull back. I'm not predicting it's going to pull back because, you know, sometimes you can just keep flying. But if it doesn't pull back, then don't take it. Don't take it, right? Take it only if the market offers you a good deal. If it doesn't, walk away, okay? Don't be desperate. It's the desperate people who get slaughtered. Now, it may also pull back to here, right? This is a gap up. So after a gap, this start of the gap becomes a support, right? So it could pull back to 94, right? And you take an entry there, okay? Over here is a bit too risky for me. Okay, finally, Unity software. Again, this is something that you can't invest in my opinion, because again, it's not consistently profitable, still losing money, very speculative. But using a price to sales ratio, I value it at about 125. So at about 196, again, way overpriced. So something to trade based on price action. Sure, let's trade it with options of a stop loss, with a profit target, cap our risk, okay? So where would you enter? Again, on daily candles, you can see 50 moving average has acted as a strong support, and this is a previous resistance that becomes support. So 145, that will be a great support zone. Again, you can see recently, because of the news, what happens? It goes parabolic, like whoa! And what happens after that? Tends to snap back. Wait for the snap, get in, write it up. If it comes back. Again, if it doesn't, let it go, find something else, all right? So I hope this has given you a better insight onto how we make better decisions in investing and trading. It is not just what to buy, it's when to buy, how many shares to buy, and when to sell. Now, join me in Black Market, which is our signature event during Black Friday every year. It's happening this weekend, where myself and Bang and Alson will share a lot more about the strategies that we use to enter and exit the markets. And a lot of neat option strategies will be revealed as well as how I pick the best companies in the world using my value momentum investment strategy. So if you have not gotten your free ticket yet, go get your free ticket to Black Market happening this weekend, right? So look at the description below. You should see a link to get your free ticket to Black Market. I'll see you guys there. May the markets be with you.